In this video I will talk about Shift Technologies stock. Something pretty crazy happened on this stock. Last day it was up around 100% and then ended the day at around plus 23%. It's not totally clear what actually happened. Probably is Reddit moving the stock, probably some short squeeze. Volume was really huge, enormous, but the stock failed to hold its gains. In this video I just want to tell you to be very careful with this stock, because yes, it's going to the moon now. But in my opinion this is a stock which could seriously go to zero. Right now the market cap is $74 million. The problem with this company is that it's a cash burning machine. As you can see, the cash burn is getting worse year by year. Revenues are doing great, they are growing at great rates. In 2021 they were up 225%, really a great rate of growth. But the problem is that this growth is not a disciplined one. The company keeps on burning a lot of cash. And the cash burn should not get much better in the next few years. And this in a normal environment. What could happen if a recession would hit the US economy? I believe that if a recession would really hit the USA, this company could go bankrupt. We need to keep in mind that Shift business is very cyclical. They sell used cars, so during a recession people tend not to buy cars. A car is probably the first expense a person is going to reduce when a recession hit. If you lose your job, you're not going to worry about buying a car. Furthermore, there is another factor which is going to negatively affect Shift, which is the rising interest rates. That's because rising interest rates means the company is going to have to pay a higher interest rate on new debt it's going to borrow. And yes, this company is going to have to borrow new money, because right now they burn 200 plus millions every year and they have cash and short-term investments for 95 million, but they have short-term borrowings for 100 million and they have long-term debt for 144 million US dollars. So if they keep on burning around 200 million US dollars, some which could get worse if a recession hit, the company is going to have to borrow new money. But are they going to be able to borrow new money? I'm not sure about this, because if a recession hit, if interest rates keep on rising, it's going to be really hard to borrow new money. Right now, the company pays basically no interest on its debt. Its interests are really low. That's very good. But now interest rates are higher, and banks are not gonna be super happy about giving money to such a company which is burning a lot of cash. Another problem is that the company went from being around $10 per share to being now 90 cents per share. So the market cap got a lot lower, now it's 74 million. So they don't even have the possibility to dilute share capital, they can't even issue new stock. I mean, they can do it, but it's not going to affect their balance sheet so much. How much can they dilute? 20, 30, 40, 50 million? It's nothing for a company which burns $200 million every year. The worrisome thing is that analysts expect free cash flow to be strongly negative for the next 5 years. As you can see, free cash flow projection by analysts are pretty scary. They believe the company is going to burn more than $1 billion in the next 5 years. This is exactly why the stock went from being a overhyped, very followed stock to a destroyed penny stock. If the company is really going to burn this amount of cash in the next few years, there is no possibility that this company is going to survive. It's going to bankrupt for sure if it's going to burn this amount of cash. Until now, the only positive thing about this company is revenue growth, which is really monstrous. But I believe management made a lot of mistakes. They are focusing too much on expansion and on too fast expansion. This is exaggerated, this is too much. You can't handle this much growth and at the same time take care of margins. Margins are obviously getting destroyed because you can't handle them with such growth. Furthermore, management probably should have diluted at higher prices. And they didn't do it. As you can see, they didn't issue any new stock. But they should have done it. They should have sold stock when the stock was higher to secure their survival because they operate in a extremely cyclical market. So they handled the company in a very risky way. Basically, they handled it being sure of a best case scenario. They didn't prepare for hard times. They only thought about growing as much as possible until the cycle is kind of good. Of course, I hope this company is not going bankrupt. I know a lot of people who hold a stake in this stock, a lot of YouTubers, a lot of small retail investors. So the purpose of my video is not to bring bad luck, it's just to warn you to be very careful from these hyper-hyped stocks. If Shift can execute, if they can reduce their cash burn, this stock could be a multi-bagger, but if they can't improve their marginality, if they can't get to positive cash flows, this company is going to bankrupt, this stock is going to zero. So be very careful and always do your own due diligence when you think about investing in a stock. Analyze the stocks in which you invest. Don't go randomly following some YouTuber or following anybody, even Warren Buffett. You always need to be very careful because everyone can make mistakes, even Warren Buffett. That's it for this video. If you liked it, please remember to subscribe to my YouTube channel, leave a like, and perhaps leave a comment. Until next time, have a nice day. Bye!